Hello everyone, I am Professor Manjula Devi P. I am here to discuss about International Financial Reporting Standards. So this actually comes in 5th semester of Bangalore University, and of course many other universities also have this as part of their syllabus. So let's see what is IFRS, and in this unit, in this session, what do we have to discuss about? Okay. Before you go about IFRS, you must be aware of accounting standards. So what is accounting standard and what is the purpose of the accounting standard? So you must have studied in your earlier classes, isn't it? Accounting standards are basically set of rules which are framed to guide in the preparation of financial reports. Now, every country has their own accounting standard according to their requirement, isn't it? So they give the rules or the conventions or the treatment of certain items while preparing the books of accounts, especially while preparing the financial reports. So now in connection to that, keeping accounting standards in mind, let's see what is this International Financial Reporting Standards. So here we are talking about Unit 1. So in this we have Introduction to IFRS. So here I'll be using some technical terms as I have already spoken about International Financial Reporting Standards. Here onwards I'll be calling it as IFRS. Then we have something called as International Accounting Standards Board. What is it? What is the function? All that we'll discuss. So here on I'll be using the term IASB, which means International Accounting Standards Board. And we also have a term International Accounting Standards Committee. I'll be referring it as IASC. Okay. So what is the meaning of IFRS? So IFRS are set of international accounting standards stating how particular types of transactions and other events should be reported in financial statements. As I told, it is much similar to your accounting standards. Only thing here we have this term of international coming into picture, isn't it? Even accounting standards are set of guidelines to prepare the financial reports, how to treat certain items, how to prepare, what should be the format, what should be the framework. Same way, we have the set of standards which is accepted internationally. So here comes IASB. So anyway, any accounting standard for that matter has to be given by an authority. Like accounting standards, what I was talking about, in India, we have Indian Accounting Standards, which is given by ICAI, which means Institute of Chartered Accountants of India. Same way, the IFRS are issued by the authority called IASB. So what is the basic goal of IASB? The goal of IASB is to make international comparison of financial statement easy through IFRS. Okay, then we'll see why the comparison is needed and all that we'll see. Okay, so IASB came into existence in the year 2001. Before IASB, we had something called as IASC, International Accounting Standards Committee. They operated from 1973 to 2000. And IASC had released accounting standards which was called as IAS, that is International Accounting Standards, and they had like IAS 1 to IAS 41. So what are these IAS 1 to 41? We'll see the list later. So while framing this IFRS, that is International Financial Reporting Standards, what are the assumptions? Like we already know accounting concepts and conventions, which says about individual entity, money measurement, so all those things, going concern. Same way, even IFRS is based on those basic concepts and conventions of accounting. The very first thing is economic entity. That means the business has its own individual identity separate from its owners. Then we have going concern, which means business will go for a long duration of time. Then the figures expressed in the financial reports are having a monetary unit. It can be expressed in rupees or dollars, but they are expressed in one unit of currency. Then it is based on accrual basis. As you already know, cash basis and accrual basis. Accrual basis means recording the transaction as the incur, like not actually when the amount is received or paid. It is when the expenses are incurred and incomes are earned, it is recorded in the books. Okay, so these are the basic assumptions. Like these are the same assumptions what every accounting statement is based with. So need for IFRS, the very important question. So as I was talking about accounting standards, every country in the world has their own accounting standards, isn't it? If you come to India, India has Indian accounting standard. If you go to US, they follow US accounting standards. Then why there is a need for this IFRS when every country has its own accounting standards? The answer is very simple. Today we are living in a global world, isn't it? So most of the companies are working abroad. Like we have all MNCs where the original country is different and where they're operating is different. So in that case, where the countries are operating in multiple location or in global platform, we need one accounting standard which can bind the accounting standard of the entire globe, isn't it? So as the globe has become a small village where there's no boundaries, where the business has grown outside their domestic markets, so we need one accounting standard which basically can be applicable anywhere, whether you are in India, whether you are in US, whether you are in UK, wherever you're operating, the standard or the framework what you are using has to be common. So that's why we need IFRS in practice. And again, when it comes to investment, when it comes to any cross-border transaction, so if we have one common standard, then it becomes easier. And again, the most important, the comparison. Like you have your branch in India, you have your branch in US. When you're comparing the performance, if both the accounts are prepared by using a common framework, then it is easy to compare. Otherwise, if you follow Indian accounting standard, your company may be showing a different profit. If you follow US standard, it may be showing a different profit, which is where it shows discrepancies. So in order to have a common comparison platform, it's better to have a common framework or common set of rules and regulations. So we need IFRS in place. Then what is the objective? As we have already discussed about the need, what is the objective of IFRS? The first and foremost, it is to develop a single set of high quality, understandable, enforceable and globally accepted financial reporting standards. Okay, so as we are working on a global platform, as companies do have their branches in all part of the world, so we need an understandable, high quality and globally accepted standards, reporting standards. Then again, it has to be transparent. It should facilitate comparison. So to have a better comparison between the financial statements of different part of the countries, different part of the world, in fact, we need IFRS. That's one of the important objective. Then again, to promote the use of rigorous application of those standards, then to promote and facilitate adoption of IFRS, to make a common platform for better understanding of accounting internationally, and also to synchronize. Like as I said, if you're like summing up, like you have branches in 10 different countries and you want to see what is the total profit that you have got from all these 10 different countries. So if you have followed one standard in all these 10 countries, then it is easy for you to compile and find out whether you have made profit or loss, isn't it? And also, it is the objective of IFRS to facilitate greater cross border transactions, maybe for raising funds, for investment, for trading, for reporting. So, for all these purpose, we need IFRS. And the most important, last but not the least, to have a common language. Like you all know, accounting is the language through which business speaks. So here, if it is a common language, then better understandability of the reports can be done. So that's the main objective of IFRS. Then if we talk about the relevance, so is it relevant in today's world? Of course, the accounting standards what each country has on its own may be outdated when we talk about the globalized world, isn't it? Because the way depreciation is calculated in India, the percentage applied or the method followed may be different the way it is done in US. So, when we are operating in a globalized world, there has to be one common set of rules which facilitates the comparison. So, IFRS is the most relevant thing needed for preparing the books of accounts today. So, modern economies rely on cross-border transaction and free flow of international capital. So, we need IFRS in the globalized world. Again, more than a third of all financial transactions occur cross borders. So, and the number is expected to grow. Like today, whatever the level of extent of international transactions we have, it is much more than what it was 10 years before. And of course, you can expect after 10 years, you can expect again a hike if you compare today's and after 10 years data. So as this cross-border transactions are increasing, the more need of IFRS comes into picture. Again, when investors seek diversification and investment opportunities across the world, definitely you need one common platform to facilitate. So again, companies raise capital and investors invest abroad, companies set up their branches abroad. So because of all these reasons, IFRS becomes more relevant in current scenario. Yeah, just to sum up today's session. So we started with what is IFRS, and I told IFRS is closely related to the concept of accounting standards. What is accounting standard? It gives a set of framework, or it gives a set of rules and regulations, or the way the financial reports has to be prepared. When it comes to IFRS, so this gives a set of international accounting standards which is commonly used worldwide. Okay, and this IFRS is issued by IASB, which is International Accounting Standards Board, and they provide common rules for recording the transaction, for treating the items, for the common framework worldwide. The objective of IFRS is to develop a single set of high quality, understandable, enforceable, and globally accepted financial reporting standards based upon clearly articulated principles. Then again, it is extremely important to have a common accounting standard in a globalized world. As we are living in a globalized world, as the branches of the companies are across the countries, then it's important that each branch in different country follow the common set of standards. That's why IFRS is more relevant in today's world. Hope you all understood what is IFRS and what is the need for IFRS and what is the objective and what is the relevance of IFRS in the present context. Thank you very much. These are the references which I have used. You can use these books for your reference. Thank you.